Indrani, before we talk about the best places for investors to allocate assets, what is your view of the overall economy right now? What's your macro perspective?
So my macro perspective is that things are very steady at the headline level. Overall global growth estimates for 2026 are pretty much in line with what was the 10-year average. So things seem stable, but with deep shifts underneath, which are both in terms of trade patterns changing, which countries are having their growth estimates upped, and also uncertainty is off its high, but remains it's still elevated compared to its long-term averages. And in the US too, the uncertainty around what's the neutral rate, all this could cause a lot of volatility.
And there's a lot of uncertainty around the Fed right now, as with regard to who's going to lead it and how many cuts we're going to get this year. How is this impacting the market in your view?
So two things. One is obviously the uncertainty about what the Fed's going to do. And even every person in the Fed, given all the information, because it has a dual mandate. And right now, the dual mandate, what works for unemployment is not the best thing for the inflation front, leads to a lot of uncertainty. And similarly, the wide estimates around what is the neutral rate for the United States, again, adds to uncertainty. And that uncertainty comes into the pricing of risk assets and the potential for, dispersion or volatility.
And a lot of that uncertainty might be moving money into foreign assets, because we saw international equities really outperform U.S. Stocks last year. Do you expect this to continue? What are your thoughts on international equities?
So 2025 was really a reset in terms of the rest of the world equities relative to the US, where pretty much most parts of the world really outperformed. Some key trends being, markets like Korea and Taiwan, emerging markets doing well, China doing so well, developed ex-US, broadly Europe, UK, every part of the world, because there was a broadening of the drivers. That still continues. And the valuation re-rating, the changes going on in other parts of the world are right now more, simply because the US has been very richly priced. And last thing I would point out, in a long-term sense, the world is very overweight United States. US, as a part of all world equity, was just about 40% when we headed out of the GFC. In 2024, it reached a peak of 65%. Last year's repricing brought it down to 63%. But the world is still very overweight the United States. And in a world of so much uncertainty, there is diversification going on. So what we saw in 2025, those tailwinds broadly continue and are showing up in the returns year to date. 2026, January is almost over. So yes, it's pretty much the same trends this year.
And you mentioned the emerging markets. They did exceptionally well in 2025. Do you expect that to continue? What are your thoughts on the emerging markets?
So again, emerging markets is a repricing story that we have been talking about for the last 2-3 years. Think of it as a corporate balance sheet. As emerging markets became more resilient and their risk reduced, credit ratings went up and things like that, their fixed income got repriced a couple of years back. Their sovereign yields compressed relative to the G7 countries when the Fed was rising rates. Then the repricing happened in very good returns in many of their currency markets. And now that repricing is happening in the most risky asset, meaning equities. 2025 saw emerging markets outperforming developed markets. And their strength remains that they have multiple drivers. They have technology, they have financials, they have precious metal, materials, the green transition and the commodities related to that. So multiple drivers and their essential strength continues. So the repricing, once it has started, tends to have momentum of its own.
And the weakening of the dollar is also certainly helping the emerging markets. Can you comment on that, please?
So 2025, again, we saw the dollar come off its high. And this was even before the Fed started cutting rates. So this year now, when the Fed has done a few rate cuts, the rate differentials could point to further dollar weakening. But the point is 2025 dollar weakening was more because of the uncertainty and the fact that the dollar had reached a 20 to 40-year high, depending on which metric you. So just like US equities are getting a little reprice, you have the dollar kind of reaching it more towards what the valuations would imply for. So yes, what is happening in the dollar would provide further tailwinds for international markets, particularly for US dollar investors.
And then finally, what is happening in the dollar is helping gold, which we've seen just fly off the shelves. What are your thoughts on gold in 2026?
So gold has had a phenomenal rally in the last couple of years. And what's very interesting is that the gold rally that really started a couple of years back, again, because of the uncertainty, we had the COVID uncertainty and then the US trade policy uncertainty. Gold does well in uncertainty. What has changed is 2 or 3 years back, it was mainly central banks buying gold and diversifying their reserves. Last year, we saw a lot of investment demand for gold, and that investment demand for gold has now become the key marginal driver. And again, that's something that's still showing up in 2026.
All right, well, thanks for coming on and talking about it.
Thank you so much.